If you're thinking about buying a property in Ocean City, but are still on the fence, you're not sure what's going to happen with interest rates. Are prices going to come back down? We're going to dive deep into the statistics and the state of the market to make sure that you understand fully why now is the best time to buy. Hey, everybody, Nick Deckard here. Welcome back to the channel. If this is not your first time, if it is your first time, welcome. I hope you learn a whole lot because we are going to cover in detail exactly why now is the best time and what you should expect from the market going forward. So November is the first month where we've actually gotten to do 3 market updates. It's just how the calendar worked out. If you're new to this, we go into detail. There are a whole lot of visuals to make sure that you can understand exactly what's happening. And I'll provide my commentary as to what I think will happen going forward. So without further ado, let's cover a whole heck of a lot here. So with mortgage rates, they have bumped up a little bit. I've seen some in the low to mid threes, depending on if it's a condo, depending on credit score. But all in all, they're still hovering just above 3%. And again, historically, that's no sweat. But from where we are compared to the record lows earlier this year, they have jumped up quite a bit. And we'll talk about at the end where they're going to go. And I'm going to give you a hint. It's up. So inventory is still going downwards, and it's going down fairly quickly compared to the bounces that we saw over the past few months. So we stuck around 300 total properties for a number of months from June to October. But since then, we've come all the way down to 261. And I don't expect that that number is going to come up until the spring. So until then, it's going to still trickle down. And it's going to get harder and harder to find exactly what it is you're looking for. So as all of that is happening, the days on market are going to keep dropping, right? Because the demand is still there. We're going to talk about why now is really the best time to buy, and that's prior to the spring boom. And until that happens, days on market will still keep trending down a hair at a time because there's not much room left for them to drop. So in terms of prices, I'm sure you're aware, but if you're not, they've been trending up steadily for quite some time, and that trend is still going. So let's talk about our pending and closed sales. Again, these are good indicators of where we are in terms of a balanced market or a imbalanced market. So I like to compare 2019 pre-COVID to where we are now because 2020 was absolute chaos. So as you can see from the white arrows here, comparing November 2019 to this current November, which is just ending as we speak, we're about even. So we've now trended a few months in a row where demand is still strong, where a lot of homes are still going under contract. And that just means that the demand is still there, right? So as prices continue to increase, it's not stopping people from taking that plunge. Now, in terms of closed sales, again, as long as this continues to track with pending sales, as it should, it's going to indicate that we're back in balance, right? The demand is still so high that as prices continue to go up, it's not dissuading people from making that purchase. So in terms of single family homes, prices are still going upwards. We took our biggest jump in quite a while at about 3.5% month over month, and still trending up with no real slowdown in sight. So days on market, again, just as we took the jump up in price, we took a jump down in days on market. So single families are going very, very quickly. There are so few out there that they get pounced on, multiple offers. It's one of those situations where there aren't typically multiple offers this time of year, but single family homes in particular are still a very, very hot commodity. So if you're looking for one of those, you have to be very strategic and very fast if you want to have a shot. Now, condos and townhomes still holding incredibly steady. I mean, this is about as flat of a line as you're going to get over a 1.5 year period of continued incremental price increases. So as long as that holds and demand is there, that's going to continue. And days on market, again, we took a little inch down there, but nothing too major, but we are still substantially below where we were just a year ago. So this is the big one, right? Everything you're here for. Where are we going? Where's this market going, and what should you do about it? So mortgage rates are the first big thing that's going to change materially, right? So the prices have been incrementally going up. Everything's been very, very slow and steady, but bankable. Now, interest rates, the Fed plans to wind down their bond buying process by mid-March of 2022. And what that means, in a nutshell, is that they're going to try to squash the ever-rising inflation, and they don't think it's going to take a huge hit on the financial markets. But what's going to result from that move is going to be an increase in mortgage rates. And it can happen pretty quickly depending on when they actually make those moves to slow down their bond buying. And we call it the tapering process. And they instituted that when COVID hit to keep the economy rolling. So the expectation here is that rates next year on average will be between 3.5% and 4%. But whenever that first decision comes, shortly after, we should see a pretty substantial price or a rate increase, I should say. So in terms of why now is better than waiting, especially if you're waiting for the spring, not only are prices going to continue going up when that happens, but you're now going to be double whammied with higher interest rates. So inventory, there are still homes hitting the market. It's slowing down pretty substantially as we get into the holiday season, which is totally normal. The good ones are still going within days, as you saw by the trending days on market still heading down. But as inventory is going to continue to decrease, it's just going to be harder and harder for buyers to find what they want and to have any form of leverage. But all of that said, this is really, again, I'll say the last big opportunity between now, the month of December, and January before everybody's attention comes back, right? A lot of buyers come holiday time, they have other things to focus on. We all do. But there are options and there are ways to find values now that you simply won't be able to find come the spring. As that demand takes another huge spike, you're going to see, I believe, another situation like we had last spring, where you're going to have to slash contingencies, overpay, pay cash, make your offer extraordinarily strong and outbid other people. So the next 2 months or so is going to be the chance where you can avoid all of that. The prices are still not going to be clearance rack style, but they're going to be substantially better at lower interest rates, and you get to keep your protections and your contingencies in your contract. So as for prices, I expect that they will continue to creep up, right? If you're a seller and you know that there's still demand out there, the prices are continually increasing, you're going to continue that trend of reaching for just a little bit more than the comps. And as long as the appraisals continue to come in, and they also understand what's happening with the market, I would expect this trend to continue. Now, the one thing to keep an eye out for, and I don't want you to read in too much to it, which is why I want to talk about it now instead of at the end, with December. So with the pending and closed sales we talked about at the beginning, they're generally on trend with where we were in 2019. I think we're going to see our first big deviation in the month of December, specifically with closed sales. So I took a looking forward, and there's still a whole month ahead of us, but there are 32 sales scheduled to close in the month of December, which is roughly half of what we had in 2019. The reason why I think we're going to see that big deviation is, yes, there are cash buyers still out there that are closing in a week or two, but I don't expect there to be 32 of them that crop up in the next week or so and still close in the month of December. So I do think we will see what will look like a slowdown, but I don't believe that that has anything to do with demand. I believe that has everything to do with the selection and the complete lack of inventory. If there were more homes out there, more homes would be going under contract and closing. So all that said, the days on market, again, is going to continue inching downwards. They're going to stay pretty low, and they will be that way until the spring and possibly through the spring. So with that all out of the way, I appreciate you taking some time to check this out. If you have any questions, you can reach me any of the ways here. Feel free to drop them directly below in the comments, and I will get right back to them as well. But I hope you learned something, and I look forward to seeing you on the next video.